Hello, good evening, everyone. We are back again on Wednesday Sky High Symposium. This is our 19th series. On behalf of WMEC and ICAI, I welcome all beautiful, intelligent women participants. And today we have with us our own past president, CA Prafulla Chhajer sir. And he is always president because when I was chairperson, he was the president. Always president, sir. Welcome you to our Sky High Symposium Series 19. Today we have two speakers with us. CA Tanvi Vora, and she'll be taking us through the overview of FBI and ECBs under FEMA, and Pechi, she'll take us through practice management skills and benefits. And our very renowned moderators, coordinators, we can say Swarupa, Mosmi, and Hiloni. And sir, this is our every Wednesday we are meeting online program. This is our 19th program. We have kept the name of the series as a Sky High Symposium because sky is not the limit. And through this series, we want to motivate all our women fraternity. This is open. So we invite the speakers to come, and this is the platform given to them. We also invite the coordinators to come so that their abilities, the coordination, they are motivated to come over here. With inspiration and motivation, what you have given always to us, to me specifically, we thought that you should always be here, and we have invited you. It's our privilege to hear you, sir. And once again, welcome to you, sir. In brief, everyone knows Praful Bhai as such, but I will say that sir, is a past president of ICAI in the year 2019-20, just before pandemic year. He was the president. He is a past chairman of Western region of our council, and at present he is also on the board of IFAC, and at present he is chairing IFAC, the World Congress. And there are a lot of things, kappa, safa, and IFAC, but I'm not going into this. As such, Praful Bhai, knows everyone by name to name, all those things are not required for him to say. So, sir, thank you once again. Welcome to you, and over to you to share your words of wisdom.
Thank you so much, Priti, for those wonderful, opening remarks, and especially, praising me. Many times, once you are past of something, people try to forget. But I think this is the great ICI, and especially when I have friends like you who were, I had witnessed your journey right from a normal member. And when you were a normal member, that time this kind of wow series was not there. This kind of Wednesday series was not there. And so I had witnessed your journey right from a so-called common member to then the regional council member, and now you are heading at the central council level, and I'm really happy for that. And since you have witnessed yourself all this journey, the difficulties, especially the women member friends, we always say in ICI it is gender neutral profession. We got about 30% women chartered accountant in our the entire fraternity. When it comes to student, about 37-38% girls are pursuing this particular chartered accountancy profession. But when it comes to leadership role, when it comes to you given back to alma mater, I had always found in my journey of the ICI that women are not coming forward, the girls are not coming forward. And I think this kind of initiative, and that's why I must congratulate Priti, especially to you and your committee, entire committee, back office also, Shanu and her team, for putting forth this, wonderful series. Because once in a while to do program is good, but just now you told me this is the 19th program in this Sky High Symposium which you are organizing. So my best compliments to the committee, and also I must congratulate the ladies who have come forward by way of a speaker, and also the various coordinators. And friends, let me tell you, as I was talking, this is a really gender neutral profession, and there is if it is your knowledge that is always being respected. And the only small gaps now this women committee is ensuring And though women are very powerful, but the name of the committee is still Women Empowerment Committee. And jokingly, we used to tell in the council when I was the council member, the way now the girls are coming forward, the way now you are demonstrating your skills which were there inside but not shown to the world. Very soon we will have the Men Empowerment Committee, because now everywhere you are going to take over. So that is the power of the our lady members also, and therefore lot of my respect and lot of my compliments to the entire committee in the entire ecosystem, everybody. Friends, the council is doing a lot of things for, especially for the members as such, and therefore be it the women member program, be it the normal member program, the entire council is always concerned about the membership at large, and also the student who are going to be our future brand ambassador. And I think the today's topics are really important. Again, I must compliment the committee and the speakers also, because the first topic is about FDI and external commercial borrowings. Many times when you are into practice, and those who are into practice, we always feel key practice areas are shrinking. There is, bank audits are going down. What should we be doing? So I always talk to my chartered accountants. Are you born only to do bank audit and the concurrent audits? Especially when so many things are happening. Government is talking about 5 trillion economy. The entire world has become one because of technology. Now sitting at any corner of the country, you can actually give your services to the entire world. And therefore the first topic about the FDI and external commercial borrowings is really important. And I'm quite sure the speaker will give justice, and also she will tell us the areas of what are the good professional opportunities apart from understanding this area also. Secondly, the second topic, again, practice management skills. This is again, I think when Preeti is here, this is her favorite topic, because she always talk to the members, and she always motivating them. Kuch nahi hota hai, you do this, you do that, and she is always will find something. So again, Preeti, congratulations to you and your entire team for having this topic also. Even though everybody traditionally last 72 years, this profession is there. We have been formed in way back in 1949, but since then, large number of chartered accountants, be it male or female, we are into practice. But still, you need the practice management skills, because as I was talking about the first topic, again, the skill sets are changing. What is the future of the firms? How technology is going to impact us? And therefore, the second topic, even though it is a routine topic, practice management skill, but I'm quite sure that will also help, especially the women chartered accountants. Many times what happens, you are always, little bit concerned about work-life balances kind of thing. And many times because of, social compulsion, sometimes I find that girls are not, at the forefront. But I think by listening to speakers in such topics where practice management skills are there and relevant topics, you can actually do work-life balance in a very fantastic manner. It's not necessary that as I was talking, because of technology, sitting at home also you can actually contribute. You need not travel to the office, maybe 3 hours, 4 hours kind of thing. So I think both the topics are really very relevant, and I'm quite sure this this is the 19th program. The past 18 program must have been also been very important. And my earnest request to all the female chartered accountant friends here, that you must participate. Many times what happens now, in one seminar, at one speaker will give one idea, and I think that one idea changes your entire life. So please, and again, technology, because of technology, you need not go to, again, now at your regional councils and the branches to attend this program. The women members committee is bringing the program, bringing the speakers, bringing the coordinators to your doorstep. Only thing, we have to log in at one particular time. And I'm quite sure with your contribution, this profession, which is already very, one of the most respected profession, we will always, with the better skill sets, we will always give justice to our clientele in all the terms, and we will be truly partner in nation building. Since I am being invited here, I will also take one opportunity to request all of you. Friends, Preeti just mentioned that there is a World Congress of Accountants. Now, let me tell about, the IFAC. Like in India, we have the Institute of Chartered Accountants of India. At global level, we have the International Federation of Accountants, which is known as the IFAC. So what this IFAC does, this is like an apex body of the entire profession globally. There are more than 172 members from 130 countries. and various accounting standards, auditing standards, and now IFRS journey and all those things at global level. IFAC is contributing immensely into this. Every 4 year, IFAC also organizes one program which is known as the World Congress of Accountants. It is like Olympics of accountants, wherein people from across the globe, they come, and what are the relevant topics, like today we are talking about futuristic topic. There also you get that 360 degree view of the profession. What is going to be the next 5 years, 10 years, 20 years down the line, how you should align your skill set for those opportunities that may come in future, and also what should be the whether you are into practice, whether you are into industry, whether you are into an entrepreneurship journey. So everything you will get the global view. So for the first time in the history of the IFA, India got this opportunity, and we are going to host this World Congress from 18th to 21st of November, this November 2022 at Mumbai Geo Convention Center. Already from more than 70 countries, let me tell you, 70 countries, people have registered for it. It is going to be for 4-day program, and there will be lot of technical sessions. There will be lot of entertainment programs, and you will get opportunity to network, to talk to various people. There will be more than 5,000 people who will be attending, and it is going to be once in a lifetime, because it happens every 4 years. And as I said, for the first time in the history, it is coming to India, and we do not know next when it will come. So even though fees normally now we are used to at very zero fees because of virtual programs and all those things, fees is little high in that particular sense, but it is like an investment to that you are making to yourself. So and it is for 4 days. Again, as I said, the world class people will be there. We are trying to get the honorable prime minister to inaugurate, and there will be so many distinguished speakers. I'm not taking your much time, because here otherwise Tanvi and both the speakers, they will send me one says, sir, people are here to listen to me. But I think, friends, this is one of the thing, and you must participate. Any help you require, you may contact either Preeti or Shanu or everybody, and they will be more than happy to welcome you in the city of Mumbai. We always say, I am from Mumbai, so we always say it is a city of dreams, city of so many. And in case you are not from Mumbai, I will request you, please come to Mumbai, join this particular program, and you can actually meet so many people across the globe. We are also keeping some networking sessions, like today's one international topic we have kept. There will be people who are coming from overseas. We are also trying to keep with this our overseas chapter, the managing committee members, networking sessions with them. There will be Indian firms which will be showcasing their talent. We are for the first time allowing Indian, being a chartered accountant practicing, we are not supposed to advertise and all those things, but thanks to Preeti and the entire council, that they have liberalized to some extent, that even the chartered accountants firm can put only for these 4 days their stalls and all those things. So it is going to be a lifetime experience. So please come, at least if you can't travel alone, so make a group of 2 people or 3 people, and again try to attend this program. And I think you have taken a lot of pain. This journey was not easy. Once you become chartered accountant, it is very easy for entire society to tell, CA ban gayi hai. But when you only know how much pain you have taken right from doing articleship to coming to this level, so therefore take one more pain, and it is not pain, it is going to be a substantial gain. So please do attend. And once again, my best wishes to the entire committee for wonderful job. Year after year, they are doing. Preeti has just entered the council, so she has a long way to go. And I'm quite sure under her leadership, next few years also, we will witness so many new programs, and she will also ensure that some of you also reach to the branch level, central council level, regional council level. Many of you will become the speakers, good coordinators. So I look forward for meeting you again and again. With that hope, with that wish, once again, congratulations to the entire team at the Women Members Empowerment Committee. Once again, congratulations to and best wishes to both the speakers and all 3 coordinators for sparing their time for the cause of the profession. Thank you so much, Preeti, for inviting me here, and over to you. Thank you.
Thank you very much, sir, for giving the details about the World Congress. So lifetime experience, if you want to have in the profession, so you should not miss the enrolling and joining the World Congress. What I can say, summarizing what, sir, there are a lot of things, into that. The speakers and all ones will announce, no, and if you enroll, no, it will be the lifetime experience. One should not miss this, and join the World Congress. And as sir has said, a lot of new activities are going on. So one of the activity which I will announce, which we have recently in the recent committee, we have approved a WMEC committee, is we are having the campus placement program for all the newly pass outs. Which is going on. Prafulbhai is also aware about it. We have the campus ascent. So after 1 year, if you want, after 1 year of qualification, if you want to change the job, then anyone can enroll for career ascent, right? So then there were a lot of women, in last 15 years of my journey with the institute, what we have observed, that there are a lot of women who have taken break in their life cycle and have not come, and they want to come back, but as sir has said, due to the change in the technology, now GST returns, totally new things. Now with the various audit tools are there, new technology is there, then they are not able to come back, because the things, the new laws have come, valuation has come, now SRO is coming, or IBC has come, lot of new things have come. So now we have kept one campus, new campus placement for women, specific women, for flexi hours and part-time work. So now, friends, all of you have the opportunity who want to do only part-time, because now a lot of outsourcing work. Now, the if you see the global data, the outsourcing work, what you have right now, in next 5 years, it is estimated that the revenue from the outsourcing work will be doubled, and it runs into the millions of rupees. So this outsourcing work, if it is from abroad, you will be able to do at your home, at your residence, in flexi hours online working. So these will be the opportunity we are inviting the companies for female, for flexi and part-time working. So, but now for that capacity building is required. So we are doing this kind of programs. We'll be having other kind of programs for building the capacity of the women who want to join this flexi and the part-time jobs. So this we have already approved, and in the month of October, this campus flexi and part-time campus interviews placements will be happening. So but if it is not like that easy कि बस इंस्टीट्यूट ने कर दिया और हो जाएगा, हम लोग को प्लेसमेंट हो जाएगा, फॉर दैट यू हैव टू एनरिच एंड यू हैव टू एनरिच नॉलेज. आपको जो भी, आपको जीएसटी अच्छा लगता है, आपको इफ यू फील लाइक यू आर मोर inclined to tax, direct tax or audit, please upgrade your knowledge, then only this will be successful for you also and for institute also. We are there to support you to do the activities, but it is all of you, you have to grab the opportunity, put your efforts to make everything workable. So my urge is to take this opportunity, grab this opportunity. We want to ensure, it is our endeavor to see that we reach out to all the members of the institute, and we reach out to you all, and ensure that our members grow to the greatest height of their career. And with these words, I also thank Praful Bhai, because the way he is working, he is at present independent director in one of the largest bank, that is State Bank of India. The time and the efforts he is putting for institute at present also, either by way of World Congress or in any other form, because whenever we take his guidance is there and always available, whether it is Women Empowerment Committee, World Congress, or anything else. Sir, we really thank you for coming over here, putting so much of your efforts. The last 20 years, like yesterday we were there in one program of institute, and sir was saying in the year 1999 sir has joined, and it's about 25 years what sir has contributed for the institute, for the members, for the students. Sir, it's your greatness that you have come over here in spite of your busy schedule. Thank you very much on behalf of institute, on behalf of WMEC, that you have come. Thank you very much. And now I also thank Shanu and entire team for coordinating all the events. And now I think first introduction of the speaker has been taken by Swarupa, right? Then
Ma'am, I'm doing it.
Moshmi, correct. So over to Moshmi. Moshmi, please take over. Thank you.
Thank you so much, ma'am. I take this opportunity to introduce our next speaker, CA Tanvi Vora, madam, to talk on the overview of FDI and external borrowing under FEMA. Tanvi Vora, madam, is a qualified chartered accountant from India. She holds a bachelor's degree in law from KC Law College, Mumbai University. She has also received an advanced diploma in international taxation from the Chartered Institute of Taxation, United Kingdom. She holds an advanced LLM in international tax law from University of Amsterdam and was awarded the UVA IBFD scholarship. She has over 10 years of experience and is regularly providing services under Indian FEMA laws, transfer pricing, and international taxation consultancy services, and is currently working on various research projects for international taxation. She is a director, tax and regulatory at Hardik Mehta and Company, specializing in advising clients on exchange control law and regulations, FEMA, transfer pricing regulations, and international tax law. In the past, she has worked as a partner of PR Bhuta and Company, a boutique firm with special focus on emigrating and immigrating individuals. She has also worked with KPMG India in transfer pricing with TP Oswal and Associates, Mumbai, India. Her varied work experience includes transfer pricing, compliance, and consultancy of large M&Es, and has also advised on numerous cross-border transactions. She is serving as a convener for the Membership and Public Relations Committee of the Chamber of Tax Consultants, India, since the year 2021 to 22-23, and is also serving as the convener for the FEMA Study Circle as a part of International Taxation Committee of the Chamber of Tax Consultants, India. She has co-authored the publication FEMA Compounding Orders, a comprehensive analysis published by Bloomberg India in July 19, and also Volume 2 published in October 2020. She is a regular speaker at various forums and has published numerous articles on FEMA, transfer pricing, and international taxation. I give a very warm welcome to CA Tanvi, madam, and really impressed by the profile that she has shared. And I'm sure all the audience are going to benefit with the tremendous knowledge and expertise that she's going to share today with us. Welcome to you, Tanvi, madam. Over to you.
Thank you so much.
Ma'am, you're on mute.
Thank you so much, Moshmi. I'll start my session today. And firstly, before that, I want to thank Preeti madam for inviting me today and Professor for gracing the occasion. And really thanks to all the coordinators for all the hard work that you are doing in conducting this session regularly. It's really nice to see that you are motivating women to take our entire CA fraternity forward. And like Sir said, we are the next leaders here. So we'll see Preeti ma'am also yet on the top position very soon, shortly. So when I come into the topic at hand, because the time is pretty short and we did a paucity of time, I have kept my presentation detailed, but I may skip through a lot, just cover the more important topics and at least the ones that would really affect the understanding of FDI and ECB. But I'm open to any questions that you may have. All the participants feel free to stop me in between if required, or we can take them at the end, a couple of minutes before the end of the session. Also, just want to mention before I start that just day before yesterday night, almost just before midnight, the RBI and the central government issued the new regulations for outbound investments although because this topic was already decided and preparations were already concluded, I am continuing with this, the FDI and ECB, but it would really be a benefit to all the participants to go through those new ODI regulations, and maybe if possible, we can have an upcoming session on the new ODI regulations shortly. So I'll just share my screen. So are the slides changing?
Yes, ma'am.
So going to the first topic. Before I start my topic, the FDI and ECB provisions, these, where do we refer to for when you're going through a FEMA or giving any kind of FEMA advisory? You would generally start with the FEMA Act, but if anyone has the opportunity to have a look at the FEMA Act, it is one of pretty much the smallest act, at least in comparison to Income Tax Act, which probably runs into thousands of pages. But don't be fooled by that, because what FEMA Act does is just gives the laws, or gives RBI the opportunity to make these laws, but the actual crux of FEMA lies in the notifications that are issued by RBI. I will cover a couple of them when I'm doing FDI and ECB, but there are numerous occasions on different topics. And also now regularly there are, you'll have notifications. You also have regular circulars that are updated by RBI if there's any change in any law, any amendment, or something new that they want to come up with. And also now, since the past couple of years, they've been regularly issuing master directions, which is updated every single time a new amendment has been brought into FEMA. So when I go to capital account transactions under section 6.2 of FEMA Act, that is where we get the regulation that provides the regulatory framework, and which reads as follows. And if I may just go into a little bit of the past of how this regulation came to be, or how this regulation was amended. This was recently amended in 2015 by the Finance Act 2015, where they've divided debt instruments and non-debt instruments. And under that, they have given the powers for any kind of changes, any kind of regulatory power with relation to debt instruments with the RBI, which of course it will still remain in consultation with central government, but RBI will be the one who regulates entire debt instruments, which is under 6.2. And there was another amendment. I mean, this amendment also inserted section 6.2a, which segregated non-debt instruments, and non-debt instruments will now, the power for regulating anything related to non-debt instruments will continue to lie with central government. Of course, I will go into more specifics of this when we say that central government will prescribe the laws, yes, but how it is regulated, how it is the compliance part of it, because central government being so huge, they would not be able to manage the entire process. So they have again broken up debt instruments. The rules, of course, will be prescribed by central government for non-debt instruments. What I'll be covering today in my PPT is, this is kind of an overview. Capital inflows, when they're coming into India, they can come in as FDI or as ECBs, which is debt. But ECB is another loan. It falls under the lending and borrowing regulations, which is again different. That is FEMA 3R of 2018. I'll not be covering ODI, but I just thought that I will, put it here, because that is one option for outflow of investments from India. which is under notification 120 as of until day before yesterday. And now the new regulations, that is FEMA Overseas Investment Rules 2022 and FEMA Overseas Investment Regulations FEMA 2022 have been notified on 22nd August. So coming into FDI now, the main crux of our topic, which will probably, I may end up taking more time covering FDI than ECB because it is the larger chunk of our inflows into India. Of course, ECB is equally important, but I may end up having lesser time to cover that. Of course, if Preeti ma'am allows, we can have a follow-up topic next week. So what are the entry routes that are possible for investments into India? There are numerous schedules under this FEMA non-debt instrument rules. But what I will be mainly covering today is probably this portion of it, which is the FDI, that is foreign direct investment. And I'll just touch upon the non-debt non-repatriation option that is present. These are also available: portfolio investments, venture capital, etc., AIFs, REITs. There are a lot of entry routes that are possible, but each topic will require probably a different session, so it would not be possible to cover those today. The evolution of FDI. FDI, now when I mention FDI, it is the entire regulation as a whole. It originally, with the whole entire liberalization of FERA to FEMA that happened in 1999-2000, in 2000 itself, FEMA 20 was issued by RBI, which continued to apply until 2017, when FEMA 20R was notified and it superseded FEMA 20. So we had FEMA 20R, which was kind of the revised FEMA 20 with a lot of new things changed, some older items that continued to, be either obsolete or really needed change, needed to be revamped. Those were included in FEMA 20R, but materially it was pretty similar to FEMA 20. But however, in 2019, like I earlier explained, due to the amendment because of Finance Act 2015, the entire 20R was broken up into two, that is non-debt instrument rules and the debt instrument. Non-debt instrument are rules because they are issued by the central government, and the debt instruments are referred to as regulations because they are issued by RBI. And what they eventually did was they also had a third notification, that is FEMA acquisition, FEMA mode of payment and reporting of non-debt instrument regulations, which laid down all the operational matters related to the non-debt instruments. This was because they had to eventually at least have the operational part of it managed by RBI. Although the rules on how much FDI is allowed, who can get FDI, what are the prohibited sectors, etc., which I will come to, those rules are still notified by central government, but the operationalization of these rules is managed by RBI under mode of payment and reporting of non-debt instrument regulations. We call it as FEMA 395 because that is the number that is under which it has been notified. Then this would be a handy slide for people who would want to give some kind of advice or even learn FDI. What we need to refer to before giving any kind of advice, or even for any transaction, even as an auditor. You don't need to be a FEMA specialist to know FDI, because as an auditor, if you are auditing an X company, it could be a private limited company, as small as possible, but you need to know, you need to have a check on your financials when you're doing your audit, when you're doing your this. If there is, for example, any kind of foreign investor that has invested in the company, there could be a case where the name is very simply an Indian name, but that person actually lives outside India and is a non-resident. In that case, FEMA needs to apply. FEMA regulations need to be complied with. There could be compliance like requirements, documents. You need to see whether there is FEMA that you do not go under. Otherwise, again, then you need to refer that client to go for compounding, which is in under compounding. It is a way of accepting that, okay, I have made a contravention. Please accept my mistake. I will pay the penalty, and it is considered as regularized. So this is the list of documents that you need to refer to when you are doing anything related to FDI. You have the FEMA non-debt instrument rules, the FEMA debt instrument regulations, which I already explained, and the third one, mode of payment and reporting of non-debt instrument regulations, which is the operational matters, like the filing or which bank account or how do you make a remittance or what is the requirement, etc. Mainly, if you want to see the crux of it, the documentation part of FEMA non-debt instrument rules would be under this FEMA 395. You also have the consolidated FDI policy, which is issued by, again, the central government through DPIIT, and the master direction that I mentioned that RBI regularly updates whenever there is any kind of amendment to anything related to that particular topic. And you also have FAQs on foreign investments in India, which is also on the RBI website separately, and is regularly updated if there are any new FAQs that are issued by the RBI. So this gets us to the overview of at least what FDI is, and now I go into specific definitions, the specifications of FDI. If there are any questions here, we could stop for a few minutes. Swalpa, hello.
Ma'am, we have kept the question and answer session at the end of your deliberation. So I think we will move forward.
Better? Okay, fine. No problem. Yeah. So going into the FDI, the crux of the FDI regulations and explaining a little bit of background on that. Foreign investment has been defined under the NDI rules, which means any investment made by a person resident outside India on a repatriable basis in equity instruments. Again, every word of this I will break up. Equity instruments has been separately defined. I will go into that on my next slide. Okay, and now going into FDI definition. What is, so first part of it is foreign investment. Then you specifically go into foreign direct investment. Foreign direct investment has been defined to include investment through equity instruments by a person resident outside India in an unlisted company, or in 10% or more of a listed Indian company. So this is the actual text of the definition. If I can explain to it by way of a chart, foreign direct investment is possible in an unlisted company or in a listed company. In an unlisted company, even if it is 0.0 whatever percent or any kind of percentage, even a single share in an unlisted company would be considered as FDI always. In a listed company, it says, so when I go back to this definition, in a listed company, if the investment is less than 10% foreign investment, then it is considered as FPI, foreign portfolio investment. But if the investment is more than 10% in the listed company, it is considered FDI, even if that person is a registered portfolio investor. When I say equity instruments, I said I'll explain what equity instruments include. Equity instruments include equity shares and also partly paid equity shares. There are conditions for partly paid equity shares that they should be fully paid within 12 months and 25% minimum should be the consideration that is upfront. So it can be partly only up to that percentage. Equity instrument also includes convertible debentures, and by convertible debentures in this case, it means convertible debentures that are fully compulsory and mandatorily convertible. If any of these fully compulsory and mandatory are not part of the equation, they do not fall under the definition of equity instruments. In fact, then in those cases, there is a high possibility that they would fall under the ECB regulations because it would be considered an external commercial borrowing. Preference shares also similarly should be fully compulsory and mandatory convertible, otherwise they are considered as debt. And also share warrants. Another condition for specific for equity instruments under FDI is that these equity instruments can have an optionality clause. There is no bar on that, but the optionality clause should be subject to a minimum lock-in period of 1 year, and also that option should be such an option that you are not given any kind of assured returns on exit. Portfolio investment, again, I will be just take it in very brief is when I explain the chart. When the investments in a listed company are less than 10%, then it is considered as foreign portfolio investment. And accordingly, a foreign portfolio investor is a person who is registered under the SEBI FPI regulations. Real estate business, I will skip for now and come back to when I am going through the schedules where real estate is required. So when we come to FDI now, there are two routes under which you can invest into India. One is the automatic route, one is the government approval route. Automatic route are those where under those when those conditions are satisfied, you can directly automatically invest in India. You would have obviously documentation requirements and filing compliances, but which is considered as automatic because you are suo moto filing whatever is required. There are certain sectors or there are certain conditions which you need to satisfy, and if those are not satisfied, you may need to go under approval route. For approval route, you have to make an application to RBI through FIFP, the FIFP portal. So that is where the government approval route comes into play. Why it is important is now if I see regulation 6A of the NDI rules, that whenever I mention NDI rules, I am referring to the non-debt instrument rules. So this regulation 6A is what provides the law under which you FDI under Schedule 1 can be brought into India. So Schedule 1 is what foreign direct investment falls under. It reads that any person resident outside India, PROI, may make an investment by subscription, by purchase, or they are also permitted under this schedule to sell equity instruments of an Indian company subject to the conditions of Schedule 1. However, this now was recently also amended in 2020 by Press Note 3. You would have heard a lot in the newspapers who have read regularly about Press Note 3, which was the amendment which made any kind of investments from any land border shared with India. So land borders would include not only China, but it was mainly how it was, everyone popularly knows that it was mainly triggered towards China. So any kind of investments from countries which shares land border with India, or even if it was a change due to beneficial owner, it has been now moved to approval route. So when I go into Press Note 3, and I will take a couple of minutes to explain Press Note 3. Press Note 3 was originally issued by DPIIT, which is the central government, and then this note by a notification of RBI was also given impact under FEMA on 22nd April 2020. What was the reason behind this press note? And it is also mentioned in the press note is it was issued for curbing opportunistic takeovers and acquisitions of Indian companies by countries sharing land border with India. It was mainly an attempt to stop Chinese firms of taking control of Indian companies because the economy had fallen, lots of things had happened. If a lot of these entities who had large capital invested into India and took over the larger chunk or the larger shareholding of Indian companies, control from Indian investors would be lost. So this also included any kind of change because of beneficial owner also. You could have had a company that has whose parent is actually in some other country, maybe say one of the SPV countries or like BVI or Singapore or many other companies, but eventually the owner of that company was based out of China. In such cases also you would have to take government approval because a Chinese citizen would probably have been the beneficial owner. Of course, there are a lot of again clarifications required which have not been issued, but you have to generally go for RBI approval, and there are around 70 to 80 cases that have been approved by the government for such transactions. Beneficial owner definition has continued to be a question mark because beneficial owner per se is not defined under FEMA. So maybe we can pull in the definition from either the PMLA rules or the Companies Act rules. Again, there are different thresholds for who become, when does a person become a beneficial owner. The PMLA rule mentions 25%, but the Companies Act mentions a 10% ownership. So it is always better to, if you are confused, to suggest your client to go for approval route if there's any kind of change in beneficial ownership as well. If there is also already any kind of existing investment by such entities and there is a further influx happening by that same investor, in such cases also government approval would be required, even if there is no impact on the shareholding pattern. But if any new money is coming in from such Chinese firms, government approval has been required. There is a good chance that maybe down the line, we don't know when, there is no indication yet from RBI or from the central government, but there is a chance that this press note could be repealed at a certain later stage once the economy has settled down and we can go back to normal. But until then, any kind of FDI or any kind of change in new FDI or change in existing ownership or any kind of transfer also that would result in any of the countries having a land border with India, government approval is a must as of today. Now coming into the crux of Schedule 1, when I mentioned, which I mentioned earlier, I can break up probably explaining Schedule 1 into prohibited industries, then which can also then another part of it was the prohibited entities, and of course then there is this entire schedule. The entire schedule has a list of sectors under which there are either ceilings on investment of how much is allowed under automatic route, how much is allowed under approval route, or there are even also cases where you have conditions that need to be complied. I will touch upon most of them. Not the ceilings, because that is a very large table of sectors. Those are available in the NDI rules and are also regularly updated with any change. Please refer to Schedule 1 of the non-debt instrument rules to know the current limit or the current sectoral caps, which is the word used under FEMA, before advising any clients in certain sectors. Of course, if that sector is not mentioned under that, it falls under any other sector, and then in that 100% automatic is never an issue. So when I go to prohibited industries, I can move to the next slide for that. There are general prohibitions that do not allow any kind of FDI in certain types of entities or certain types of industries, which have which are Nidhi companies, lottery businesses. I will not list all of them, but some of the important ones are real estate business, which now I can move to the real estate definition that I skipped earlier. Of course, the others are lottery, gambling, cigars, so tobacco related stuff. Trading in TDRs is also not permitted. And of course, activities that are not at all open to private sectors, we cannot have any kind of FDI, atomic and railway as of now have not been liberalized. So those do not, they are no. So prohibited entities, if I may give a couple of examples. So if there is any kind of investment coming from Pakistan or entities that are incorporated in Pakistan, it is always under the approval route. So this falls under the category of prohibited industries. There's also another category where if investment is coming from non-residents resident in Nepal or Bhutan, so they technically live non-residents outside India. But because Nepal and Bhutan also have rupee as the currency, they've put a condition here that it is permitted, and investments from NRIs from Nepal and Bhutan is permitted under automatic route, provided they are in free foreign exchange and not in rupees, and they come through normal banking channels. You cannot have money coming in through cash or other kind of modes. Ceiling on investments, again, that is a really large list of sectors. But if I can give a couple of examples and maybe take about a minute there, there is defense sector which has been liberalized over the years, and as of today, for example, defense sector up to 49% has been kept under automatic route. But if anything over and above that, it is under the approval route. And for approval, whenever I mention approval route, you have to apply to FIFP. Then there are other sectors such as commodity exchanges where 49% is under the automatic route. There's single brand retail trading. I'm just naming a few, there are many more. Single brand retail trading and even construction development, those kind of sectors, the total limit is 100% automatic. But there are numerous conditions that need to be complied with, which is the post-investment conditions, where under a single brand, there's a condition that 30% of your raw materials should be procured from India. This is, to promote Make in India, etc. And of course, for the Indian economy, it's benefiting the Indian economy at the end of the day. So there are certain sectors in this table that I mentioned under the NDI rules where they might be under 100% automatic route, but there are multiple performance-linked conditions that need to be complied with. So these are opportunities for CAs. When I mentioned that, firstly, when a new investment needs to come into India, you can advise them on whether it is under the automatic route or the approval route. If it's under the automatic route, but there are conditions that need to be complied with, you advise them on that. If the conditions are not going to be complied with, or if it's a sector that is under an approval route, you can assist them in applying to the FIFP for approval. Another acquisition. So now that I've covered at least schedule 1, going back to another concept of which all of us are aware of over the years, if you've been since you're a CA, that you have also option of right issue or bonus issues. An Indian company can always have a right issue or a bonus issue. So what are the conditions related to right and bonus issue? Is that if a certain foreign investor already holds shareholding in an Indian company, and when they originally got the original shareholding, you have complied with the FEMA rules and regulations, then you can continue to you also have the right to hold right issue under the automatic route, provided they have so this is the listed, and for unlisted the shareholding the pricing guidelines. It says that if they are not, if the foreign investor is not issued at a price which is less than what is offered to Indian investors, then you do not actually need to have a valuation certificate. So as long as the same prices are offered to resident investors and foreign investors, you can be in compliance with these this rule. Also, there is a separate rule 7A which deals with in case of renunciation, what happens. So again, a lot of times this rule is important, and it is used in the case of when there is certain structuring that is being done or certain planning that has been done, that there is foreign investors as well as Indian investors, and they want to increase the shareholding of a foreign investor while not having an actual transfer of shares. In such cases, even Indian investors may renounce their rights in equity shares in favor of a foreign investor, but then again in such cases pricing guidelines will need to be complied with. If there is no renunciation involved but you are satisfying these conditions, then you do not need to have pricing guidelines to be complied with, and without a valuation report under automatic route you can issue these rights or bonus shares. Some other options of issues, of course, normal issue of shares, which I have been covering all this time, continue to apply, but you can also have issue of shares against swap of capital instruments. You can also issue capital instruments against import of capital goods, machinery, equipment, and also against pre-operative and pre-incorporation expenses. There are some, again, conditions, limits that apply in these cases, and those are available in the regulations. Okay, so now that we've covered the issue of the instrument, once a foreign investor holds such equity instruments in an Indian company, how can they dispose of such instruments? And at the same time, you could have a case where an entity is 100% or in any kind of percentage held by a person resident in India, and that person can sell that to a person resident outside India. So of course, issue is one option to have holding in an Indian company, or you can also purchase shares from a current investor. So in this case, Rule 9 has been prescribed, and there are different situations under which who is a seller, who is a buyer, and what mode is permitted. So this table is very self-explanatory, but I'll just quickly go through that. PROI is a person resident outside India, other than an NRI, can sell their shares to another person resident outside India by way of sale or by way of gift. Similarly, person resident outside India can sell to a person resident in India by sale or gift. And that goes on. Again, here there should not be any assured returns when there is an optionality clause involved. A person resident in India can gift their shares to a person resident outside India without any limits, but only with RBI approval. There is another category of investment, which is downstream investment. Downstream investment is when a foreign entity has invested into an Indian entity, and that Indian entity invests into another Indian entity. I think downstream investment, the word itself kind of explains that. I will not go into complete specifics of it because I'm really short on time at the moment, but when more than 50% is held by a foreign entity in an Indian entity that is controlled by that entity, and then when that entity invests into another Indian company or Indian LLP, it leads to foreign investments, and there is compliance of pricing guidelines then to apply to that first level Indian company also, and also there is compliance requirements in the form of Form DI to be filed, etc. So when I say first level Indian company or the LLP is transferring shares of the second level Indian company, then reporting is required, and also you have to comply. You don't have, but in this case, you do not need to comply with pricing guidelines. And similarly, first level, but is transferring to a person resident in India. So it, as such, is a resident to resident transfer. But because this first level is held by a foreign entity and is controlled by a foreign entity, it actually is not a resident to resident transfer, and reporting requirement is required as well as pricing guidelines to be complied with. When I mentioned pricing guidelines in all these earlier slides, there is an entire specific rule under this, Rule 21, that deals with pricing guidelines. What is pricing guidelines being explained here? In case of FDI, in listed companies, it's as per SEBI. In case of unlisted companies, you have to do the pricing guideline, the valuation as per any internationally accepted pricing method, which has to be certified either by a CA or a SEBI registered merchant banker or a cost accountant. So this is what pricing guidelines and how you need to arrive at the price. So when I come to these two, when there's a transfer from a resident to a non-resident, the price should not be less than the fair value. Because what they want to ensure is the requisite amount of foreign currencies coming into India when a sale is being undertaken by a resident to a non-resident. At the same time, transfer from non-resident to resident, the opposite of that, the pricing guideline specifies that the price shall not be more than the fair value determined by the valuer. And here, of course, the same concept that when you are buying shares from a non-resident, when a resident is buying shares, they do not want excess foreign forex of India to be sent out of India. One exception that they've provided in this pricing guideline is if the foreign investor is subscribing to the memorandum of the company, that is the original subscription shares. Of course, at that time, the entity is not still actually formed. There is no business in the entity, etc. So in that case, the exception is in case of subscription shares, the value will be considered as the face value of the share, which could be 1, which could be 10, which could be 100, depending on what basis the entity has been formed. I'll take just 30 seconds for Schedule 4. So when I was going through the entity routes possible, I said I will cover Schedule 1 and just touch upon Schedule 4. Schedule 4 is the heading itself means it has been defined as investments by NRI or OCIs on non-repatriation basis. So until now, Schedule 1 dealt with everything which was on repatriation basis, which is you can freely bring in the money, freely take out the money, subject to, of course, conditions such as pricing guidelines, subject to compliance, etc. So non-repatriation basis is another option that has been provided under FEMA to only NRIs and OCIs. In this case, foreign nationals cannot take benefit of Schedule 4. And when I say benefit, why is it a benefit? The only reason being that It is, you do not need to undertake compliance requirements when you are doing Schedule 4. And, sorry. But there are, of course, restricted categories under Schedule 4, which is that they are considered at you cannot have investments in similar to earlier, such as the prohibited categories like the gambling, etc., or real estate. What are the main features when I come to Schedule 4 is that these investments are considered at par with domestic investments. So it considered as good as if a resident, me as a resident is investing into an Indian company. In that case, an NRI and OCI is investing into a resident company, but it is still considered at par. When the heading itself says non-repatriation, you would probably question that if it's a non-repatriation investment on the at the time of transfer or sale of shares, how would that person take their money back? A lot NRIs, OCIs generally, I mean, it depends on what quantum of investment is sold off or transferred, etc. But there is one scheme that is generally available to NRIs OCI, which is called the 1 million scheme. With colloquially, it's called as that. That is not the official name. Where up to 1 million per financial year, $1 million, 1 million USD per financial year can be transferred by that NRI OCI to their foreign accounts. So generally, although this investment at the time of transfer or at the time of disinvestment cannot be directly repatriated outside India, which is what Schedule 1 allows, there are other ways through which once they have received back their investment in their NRO NRE account, once taxes are paid on that investment, they can freely remit that under the 1 million scheme. So this at least brings us to the end of FDI under Schedule 1 and non-repatriable investments under Schedule 4. What are the compliances under FDI? I kept explaining earlier also, the operational guidelines for non-debt rules are provided by RBI. So RBI needs to manage this under FEMA 395. And there are amendments that come in regularly. And also this rule provides the mode of payment and reporting for these instruments. Again, I will not go into detail of it, but this can be another separate session again on the reporting issues and the reporting requirements under this. But this is always, compliances also are a major portion, which is an opportunity for CAs to also assist clients in filing all these forms. So what are the forms? It depends on the transaction that is being undertaken. If it's a case of issue of capital instruments or issue of any kind of participating rights, etc., there is a requirement to file form FCGPR. This FCGPR needs to be filed within 30 days from the issue of the instrument. And this needs to be filed through the SMF, through the firms portal, which is a separate portal of the RBI online. Things have also, over the years, over the past 10, 15 years, things have developed. First, these forms used to be physical, then they came up with different platforms through pilot, then they had this EBIS platform, which was not a big hit. Then they eventually have now moved to another platform, which they call the firms platform or the firms portal, and on which they require to file a single master form. The other requirement which regularly needs to be, annually needs to be filed once there is an FDI is the form FLA, which is an annual return on foreign liabilities and assets. This needs to be filed every year before 15th of July. There is a separate platform for this filing, which is called the FLAIR platform, FLAIR. Okay, so the first form This form FCGPR is when there is an issue of shares by an Indian company, and who needs to file this form? The Indian company itself, because they are the ones who are issuing these shares. Then in case of transfer, so I went through the entire rule 9 with you guys. So there are different categories of transfer, of course. When there is a transfer taking place, form FCTRS needs to be filed. This needs to be filed within 60 days of the transfer of the instrument or within the remittance of funds, whichever is earlier. This again is also on the forms portal through form SMF, single master form is what they use. And here I just want to mention who is required to file form FCTRS. It is the person resident in India who is either buying the shares or the person resident in India who is selling the shares. So the transferor or transferee resident in India needs to comply with this requirement of form FCTRS. Why resident? Because that is whom RBI can catch hold of. Of course, if a non-resident is purchasing the shares, they cannot go run behind a non-resident. So with that main reason in mind, either the transferor or transferee, whoever is resident in India, is required to file form FCTRS. There are certain other forms. I will quickly jump through them because they are very case specific. If there are ESOPs issued by the Indian company, then there is the form ESOP that needs to be filed. If there is depositories, there is then form depository receipt returns. There is form LLP1 and LLP2 in the case of LLPs. So if investment is coming to an LLP, you have to file form LLP1. If there's a transfer of capital contribution or the profit share of an LLP, or if there's any kind of disinvestment by a foreign investor, you have to file form LLP2. All of these are on the firm's portal only. Again, there's form INVI for investment in investment vehicles. There is form DI for investment, downstream investment, which I explained earlier. So if the first level Indian company invests into another Indian company, the second level Indian company is required to file form DI. So what is the process of filing form SMF? There is an entire user manual on the RBI forms portal, but just to explain in short, you first need to register as an entity user. There is an authority letter and certain documents that you have to attach, and RBI will provide you with login credentials. Once you log in with that entity user, you have to create an entity master form. This will be the entity master for the Indian company, whose shares are either being issued or whose shares are either being transferred, etc. After that, you will register as a business user. This business user could either be the Indian company itself who is issuing the shares, or this business user could be the person resident in India who is transferring the shares or is buying shares. AD Bank will provide you a password, and once you have that login credentials with the AD Bank, you can file form SMF. Form SMF includes all of those forms I listed earlier, FCGPR, FCTRS, etc. Depends on which applies to your case. So this is a very short overview of the reporting requirements, but this is an entire large practice area that can be that could be a great opportunity for a lot of CAs to dwell into. This brings us to the end of at least FDI at the time being. Of course, I will take questions as soon as you guys let me. How much time do I have, Swarupa?
Ma'am, maybe another like
5-7 minutes.
6-5. Yeah, if we can actually.
Okay, so I'll just quickly run through ECB.
Right.
Detail.
Right, ma'am.
ECB is mainly external commercial borrowing, which comes under the lending and borrowing regulations of FEMA. That is FEMA 3R. Again, here in this case, we refer to FEMA 3R, which is the notification that provides the ECB rules and regulations. We have the master direction on ECB, and of course, the FAQs on ECB and trade credits, which are also updated by RBI in case there is any kind of change. Master direction is also regularly updated, like a single change, and it is regularly updated online. So therefore, you always refer to at least master direction online, because there could be a change that happened even yesterday, and always be give any kind of latest advice that you have given. So what are the types of ECBs? ECB comes in two types, that is ECB in any freely convertible foreign currency or INR ECB. What are the forms of ECB? ECB could be a normal loan, which also includes banking loans. It could be any kind of securitization instruments, such as floating rate notes, floating rate bonds, NCDs, or optionally convertible or partially convertible preference shares or debentures. When I was explaining equity instruments under FDI, I mentioned that even if a single one of those mandatory convertible, fully mandatory convertible conditions are not complied, they fall under the ECB regulations because they are considered as debt in that case. You have trade credits beyond 3 years, which are considered as ECB. You have SCCBs, financial lease is also considered as ECB, as well as FCEBs, and there are rupee bonds which fall under the Indian rupee, and these are popularly very often known as masala bonds. So what are the available routes in this? Under ECB also you have automatic route and approval route. So 1 to 6 is under the automatic route, subject to, of course, the conditions that are complied with, which I'll come to further, which is eligible borrower, eligible lender, all-in cost, etc. And anything that is not covered under automatic route will be under approval route. What are the conditions that I mentioned? They are minimum average maturity period, eligible borrowers, recognized lender, all-in cost, etc. I will quickly run through these. First one being eligible borrower. Just again to give a second of evolution of ECBs. ECB was very highly regulated earlier, and it still continues to be regulated, but they have liberalized the eligible borrower and the eligible lender by a major overhaul. Earlier, there was only a specific list of people who could borrow and a specific list of people from whom you could borrow. But now it's almost changed into a negative list concept, where under eligible borrowers, what they have said is any person or any entity. So in this case, any Indian company eligible to receive FDI is eligible to also take ECB. Very vast, which is a good thing. And under recognized lenders, they have also liberalized that in a major way, and they mentioned that a recognized lender can be anyone who is from a FATF or a ISOCO compliant country. And they've also, in fact, over and above that, said they can also be multilateral or regional financial institutions. They have provided a specific condition only in cases of individuals, that an individual can be a lender. So foreign individual can be a lender only if that person holds 25% of that Indian company. Because individuals are generally less regulated across the world, they have only provided one condition, that in case of individual lenders, they need to hold equity holding in the company. Other than that, there is no condition. And also another recognized lender is a foreign branch or subsidiary of an Indian bank. What are the permitted end uses? So the permitted purposes for which you can use an ECB also had a major overhaul. There was a list specifically which was what you were permitted to use them for. Now they have also made this into a negative list end use, where they have said ECB is permitted for any purposes, for all purposes, except for those in the end use, which is real estate, investment in capital markets, equity instruments. These three are a complete no-no. They have said working capital is also not permitted except in certain cases, which I will come to. General corporate purposes also permitted, is not permitted except in certain cases. Those cases I will come to. And by cases, they mean from certain type of investor or with a certain minimum maturity period. Again, repayment of rupee loan is not permitted except in certain cases, and on lending activities also not permitted except in certain cases. So this has now become an end-use negative list concept where all purposes are permitted except these listed. Another condition also is with respect to, in case of both INR ECBs as well as foreign currency ECBs, your total ECB by an Indian company, by that particular eligible borrower, needs to be within USD 750 million. They have recently, for a limited time period, increased this 750 million limit to 150 million, 1.5 billion. And this limited period is only from 1st August until 31st December. This table is one of the more important conditions, which is minimum average maturity. Here it is minimum average. So this is the minimum requirement. And when I go to the next slide, which is all-in cost, that is the maximum limit. So minimum average maturity which is required. So your loan, your external commercial borrowing should persist for a minimum of this period. So what are the categories? So it says that minimum average maturity period of a ECB should be 3 years. But for below specific categories, it will be a different period. So there is a relaxation also, or in the opposite case, they have increased the MAP depending on the purpose for which you take the ECB. So manufacturing companies can borrow up to 50 million for as small as a period of 1 year. But if it's ECB which is raised from foreign equity holder for working capital purposes or for general corporate purposes or for repayment of loans, it is a minimum, the loan should stand for a minimum of 5 years. Similarly, this table is self-explanatory because I am low on time. I'll just run through it. ECBs for working capitals, or general corporate, from other than equity holders. So it could be any other person. Then it is 10 years. For domestic capital expenditure, it is 7 years. And for other than capital expenditure, it is 10 years. But this is rupee loans. The 10-year requirement here in this one is rupee loans. All-in cost ceiling is with respect to the maximum amount of interest that you may pay on these ECBs. Again, this is so that you do not overpay a certain foreign party, and this is to have a reserve on the or a limit on the forex reserves that leave the country. So for ECB and foreign currency, they have provided a limit of benchmark rate plus 550 basis points in case of old ECBs, but which were under the LIBOR regime, because this was recently amended that benchmark rate means AAR rate. And for new ECBs that would now be signed, the benchmark rate plus 500 basis points is the minimum all-in cost ceiling. In case of ECBs, in case of Indian, which are denominated in Indian rupees, this benchmark rate is the all-in cost is benchmark rate plus 450 basis points. And for benchmark rate for Indian rupees, you will consider the yield of any kind of government of India security plus 450 basis points. Again, there has been a recent relaxation where this all-in cost has been temporarily increased by 100 basis points. So it would be benchmark rate plus 650 basis points and benchmark rate plus 600 basis points, but only up till December 2020, 31st December 2022. Trade credits I will skip for now. What is the compliance requirement under ECBs? You have Form ECB, which needs to be filed, provided if you're under automatic route. You file the Form ECB with DAD Bank. Once Form ECB is filed and processed by RBI, you will be provided a loan registration number and any kind of drawdown of that loan. That means the first money you receive against this loan can only be received after you have been given this loan registration number. So many times what happens is an entity takes some kind of money from foreign party, and then they realize that, oh no, this should have this falls under the ECB regulations. So in this, and then they go for compliance under Form ECB and getting the loan registration number. So in the first instance itself, they are in contravention of the rules, because the timeline is always Form ECB first, loan registration number is issued to you, and only after that can you actually bring in the money against this loan into India. And once that is done on a monthly basis, Form ECB2 needs to be filed by the 7th of next month to give details of how this loan has been utilized. So ECB compliance is a very big chunk of what is a really great practice opportunity for CAs, because ECB2 returns are literally a monthly filing. So you have 12 returns for each ECB. And if you have a minimum average maturity for 5 years for a certain loan, for example, for 5 years, you have to assist the client in filing ECB2 returns. This return has to be signed by generally a practicing CS or the auditor of the company. But of course, the company itself generally files this, or you can assist them, and it's a great opportunity for you also to have some interaction with the client that needs to be filed. Certain issues that we generally come across in ECB is when a certain import payable has been outstanding for more than 3 years. RBI over the years, so when we were doing our research for our for the book for compounding models, what RBI considered any kind of outstanding import payables to be outstanding more than 3 years, they are considered as deemed ECB, and then you are compounded for not complying with the ECB regulations. And other issues that you have is ECBs by LLP, which has been a big discussion factor between bankers, between RBI and FEMA practitioners. So as per the wordings of the ECB regulations, ECBs external commercial borrowing is only permitted by Indian companies and not by LLPs. But there are certain people that says Indian entities includes LLPs as well as companies, and it is a very discussed, very hotly debated fact. But the crux of it is ECBs are only permitted by Indian companies and not by Indian LLPs. And of course, any kind of late filing of Form ECB has a ECB2 especially, because they need to be filed monthly. There is a large late submission fee that you would need to pay, or client would need to pay, and therefore it is always important to give them advice at the right time and tell them and ensure that they're filing these monthly returns. So that brings me at least to the end of my topic as of now. If there are any questions, Swarupa, we can take that.
Yes, ma'am. First of all, I really want to congratulate you, because the topic is really niche, and the query that I have received is from CS Sharad Agrawalji, who's from Gwalior. Basically, it is not related to the ECPs or the investments that we have discussed so far, but he has a very basic query, which says, what is the financial limit for FDI into India for capital account remittance and revenue account remittance under automatic rule? And what is the capping for per transaction or overall capping per annum or throughout the span of the project?
So if you can break up the question, what is the limit for what are the two things you mentioned?
He wants to know what is the limit for remittance under the automatic route for capital account and for revenue account.
So then, I mean, I do not understand where he gets the differentiation between capital account and revenue account, because FDI itself is a capital account.
Capital account, correct.
So, no limit, at least under FDI, as long as the compliance with the pricing guidelines, etc., has been complied.
Okay. 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 So, ma'am, that was the query, because rest you have with the flow chart and the tabular format, things become easy to understand, as in more than, and the way you explain, considering the paucity of time, that was really commendable.
Once again, apologize to the participants, rushed through some of the stuff, but you can contact me offline also. I would be, I will take you through any other regulation if there's any kind of query.
Certainly, certainly. So, time for me to propose a formal vote of thanks for this particular session. So, it has really been an honor to be a part of this wonderful event. On behalf of the Women Empowerment Committee of ICA, I would like to extend my heartfelt gratitude to our esteemed chief guest for the session, past president of ICA and chairman of Executive Committee of World Congress of Accountants, IFSC, CA Praful Chajat sir, as has rightly and already mentioned by Preeti Savla ma'am. Thank you very much, ma'am, for being the speaker for today's session. And you really have dealt with one of the niche areas regarding the FEMA and FDI. This will certainly be of great help to all of us, as in not all of us, but the members who are into practice with respect to FEMA. And big thank you for the members who have joined through the Zoom link and the web link to make this event a successful and meaningful one. Thank you, one and all.
Just a point you mentioned that those who are into FEMA, but consider this an opportunity to also study the laws and make a new practice area for yourself.
Yes, certainly. Thanks a lot, Tanvi ma'am. And now I request our coordinator, CA Hiloni Jai Savlaji, to introduce our next speaker for the session. Thank you, Tanvi ma'am, once again for joining with us.
Yeah, thank you, Swarupa, and thank you, Tanvi ma'am. A very good evening to one and all. It gives me immense privilege to introduce our speaker for the second session, CA Petchi Kannan ma'am. Ma'am has passed the Bachelor of Commerce out of Madurai Kamraj University in 2000-2001, with 75% of marks being the first rank holder in the college. Having qualified as Chartered Accountant in May 2007, she is also a qualified lawyer, insolvency professional, and registered as IP with IBBI. She's been faculty in ICI for various orientation and MCS program. The Rangaswamy Academic for Fiscal Research and the Society for Auditors has recognized her with Nightingale Award. Also received Lifetime Achiever Award for Social Contribution from NMCFT Kowai. Ma'am, after working as manager in international taxation with Deloitte Chennai for more than 6 years, she is presently partner in Petchi and Associates Chartered Accountants. She successfully delivered motivational speech to more than lakhs of students so far in various colleges and live TV shows telecasted as Achieved Woman in CA course. That's not all. She's also received successful CA award from Padma Shri CA T.N. Manoharan, past president of ICAI. She's also been recognized as Best Paper Presenter in 17th All India Conference organized by ICAI in Nagpur 2004. A very warm welcome to such a learned speaker. Thank you, and over to you, ma'am.
Good evening to all one and all present here. We are going to discuss about the women CA's practice management skills and benefits. Considering the time constraint, shall I restrict to 30 minutes? Moderator?
Hello?
Shall I restrict to 30 minutes?
Ma'am, actually, to be very honest, it's just that
20 minutes?
30 minutes should be fine, ma'am, because it's going to be beneficial for us only. And I really apologize that your time is getting curtailed.
No, no problem. I will make it short and sweet. It's not an issue.
Thank you very much, ma'am. And we really are fortunate enough to have such a faculty with us to be the speaker for the session. Please go ahead.
So, see, a lot of changes are being happening in this world. That's first thing is there is no gender inequality anywhere, because those are the days the people will say that female leaders like that, but now they are just calling only leaders. There are many leaders are being occupied by the women members, and women already in armed force also. And coming to our ICI, women CAs in the year 2000 was 8%, and in 2012 it is 20%, and in 2020 it is 25%. We are just increasing double, triple, and we may go up to more than 50% also. We are having a lot of spaces here, and thanks to ICI, because they are taking a lot of commitment to develop the women's CAs empowerment, as well said by our past president. During the guest lecture, he was telling that a lot of new initiatives have been taken, and Wednesday programs are being conducted, and really our Women Empowerment Committee is working with full wing with a quote that sky is not limit. So coming here, management skills. See, as a chartered accountant, we all possess the knowledge and a lot of inbuilt skill within us. And especially being a woman, we all have a multitasking skills than men always. Women CAs, if you take, no, we are playing simultaneously different roles as a lovable mother, caring wife, friendly sister, homemaker, and also rendering excellent professional service to be a part of the nation building. So management skills, what is this management skills? It's all about 4-5 things. I just rush it up. It is communication skill, leadership skills, and very important thing is problem solving skills, decision making things. So I will touch upon very important things. When it comes to the communication skills, see, even in our family who have a very good communication skills, they would be the leader of the family. Likewise, when it comes to the practice, no, this communication skill is very, very important, because we need to meet the client and we need to answer to their queries. Also, we need to represent the client authorities, tax authorities, when we are going for FEMA, before FEMA authorities. So we need a strong communication skills when we want to come into the practice. And the second one is leadership skills. Yes, of course, there is always a difference between boss and leader. See, boss instructs you to do this work. Just to take a new task on your own, come with the result like that. They will just give the work. But leader is not like that. Leader will walk with you to bring desirable results. When we are in practice, okay, let me hire some people, I will dedicate all the work. No, it's not like that. We have to be with them and we have to work. For an example, we can take this KGF film hero. He walks along with people and make them to be part of his journey. This is what the leadership skills required, because doing a right thing, the art of leadership is saying no instead of saying yes. Anyone can say yes, but it is very tough and hard to say no. So I would suggest you to read a book called Art of Saying No by Damon Zahari Das. It is a wonderful book. And the second one is problem solving. When you are in a job, it's going to be a routine work. If you really like to do a multiple tasking and you want to have a different types of problems, definitely you can come into the practice. You can enjoy what you are going to do, because we need to think out of the box, and sometimes some issues will come. It would be great experience when you come and experience over a period of time. You will get to know that things of, oh my God, these type of problems are coming, and I have took a very bold decision. and time management. When it comes to time management, always we need to set a target. See, always what I will do, when it is going to be the 30th, 31st July is the last date for filing, I never keep it in mind that it is 31st July. You believe or not, on last 30 and 31st, I was just simply working without doing anything because I set it in mind that before 10 days is due date. I will clearly inform to my clients that last minute you come, I won't do. Like this, we have to have some sort of time management. Otherwise, last minute pressure. See, if you file before 10 days, to upload it is going to take only few minutes or few seconds. But if it is going to be on the last day, it is horrible. Yeah, it is horrible that let me tell you, within uh, few minutes you can upload the return before 10 days, but on the last day to upload one return, it will take minimum 2 or 3 hours. Sometimes it will be the pressure will be like anything. So it's always better to have a time management. Don't be on the last minute rush. Plan it well in advance and do it well before the due date. Though, then it would be very great things in the practice. And most of us at our home, whether we knowingly or unknowingly, lot of skills that what I have told you, communication skill, or time management skill, or leadership skill, it is within us, and we have just to categorize to use all the skills in practice, and then we will be successful. Management skill is nothing but it is motivating other people. It is our team members. So there is moment where you have to choose whether to be silent or stand up for yourself. This practice, no, it's always give you a pleasure inside you. And establishing a CA practice is a independence at your work. No need to report to your boss or anything, and give you the opportunity of choosing clients. It's not that you have to accept all the clients who are all coming. It is a platform to provide service which one you love to do. And establishing own practice for women CAs is very, very important. It will help you to walk balance life. It is like balancing your life and work. It is work-life balance is very well. You can do it with this practice. But one thing before practice, we have to do several things, several steps you need to do. First 3 years, you have to keep it in your mind that it is going to be nil income. Oh my God, what you are saying, my precious 3 years. I am telling you, it is if you keep it zero, either you receive 1,000 rupees or 10,000 rupees, it is going to be a happy for you. I'm not telling that there will be any return, but you will definitely have a return, but don't expect. This is what I got this valuable guidance from my friend when I was about to come into the practice. He was telling that first 3 years you have to wait. You have to keep it in your mind that it is nil, but I'm damn sure that we will get minimum sort of return. But after 3 years, the growth will be very good, and you can see the things that everyone can come into the practice. That a lot and lot of opportunities are there in the practice. So I'm going to give you very small secret sauce for a successful practice. First one is human capital. Try to have a work experience and a good staffs with you. That will be very, very important for the things. And second one is knowledge and skills. We need to keep on update our knowledge on the amendments, updates, everything. And very important thing is professional network, which many people will miss out, because the best way to open up yourself to business opportunity is through professional networking, as said by our chief guest, past president sir. This 4 day is going to be the lifetime opportunity for every CAs to attend this Congress thing in this thing. It is a networking session. You can see the people across the world, and we can have the networking, because through professional networking only we can get a lot of good contacts, and across states, across global, we can do the work. And also, never and ever see any of your friends as a competitor, yeah. Because no one is competitor for anyone. We ourselves should not discourage ourselves, because when in my premises there are 4 5 chartered accountants are there. One of my friend came, he's also chartered, and he was telling that, Vichy, you have a lot of competitors around you. I said, no, I have not looked like that. They are all seniors to me. If I have any doubt, if I come across with some problem, I can ask them. I can share the knowledge. I can share the experience. Some amendments come or some announcements come, we can share it. Really, I enjoyed being with those people. Still, I'm continuing in that office only. They are really helping me. I too give some information. They too share some information, and those things are really happening. So never and ever see your colleague chartered accountant as a your competitors. Always see them as a friend, and have a thought process that grow along with everyone. It's not about growing alone, it's grow along with everyone. That is the secret for achieving more business and be very successful. And finally, it is client satisfaction. Client satisfaction is very, very important, because customer derives from doing business with a firm. If you satisfy one client, they are going to bring many clients. And don't wait for extraordinary opportunities. Let me get a big client. No. Seize common occasions and make them great. Since even though the time is very restricted, I have 10 more minutes. Let me share my own experience that see uh, always we know that becoming a chartered accountant is not an easy joke or cakewalk. It involves multiple challenges for everyone. For everyone, nobody is exemption for it. Having achieved a dream of CA in 2007 and also got placement in Big Four, I thought that yeah, everything come to a conclusion. But what made me to be see the things is, sometimes when you put down, when you feel to rise up, the search for my unlimited boundaries made me to come into the practice. Being a first graduate in my family and from a economically backward family, it's not that easy to be a practicing chartered accountant. Everyone has discouraged me that, Pechi, you are taking uh, a very bad decision in your life. See, you are in a big four and earning in lakhs. Why you want to go to practice? But I said, always my mom is my heroine, and she is my role model. She always, she walks for more than 12 hours. She woke up early morning, 4 o'clock. She go to market. She buy vegetables. She sell it in the roadside, and she came back very late night. And many days we don't know when we eat our night food, because in sleep she will feed us. Like that, she struggled like anything, and she was always telling to me, "Do what you like. Do what you like." Being in a job and doing the same routine work, I don't like. Even it is not me. I always want to have my passion towards that, and what I would like, that I will do. So she said that if you like this, you go. So seeing her as a role model, I want to do a good practice. That's made me to be a practicing chartered accountant today. And when I left Big Four, even we can say that, but the pain which we undergo every month in your bank account, it will amount will be credited, but after that it is nil, and keeping it for 3 years, really it is a tough time, but it helps you out. Why I am telling you this is because see, we have to desire to reach the height of sky. That is the theme of our meeting also. Sky is the limit, but I will tell you that height of sky, if you try, then we can reach to the height of tree. The attitude makes a difference in life, and many see things as they are and ask why we should think as why not I, like that. And I really like the Swami Vivekananda quote that if you think you can, you can. And always before we end up, I just want to share you something. Always seeing a couple, people would say that AC made for each other couple, yeah, like that. But in my personal life, whenever people see me and my husband, no, they will say that you people are made for, not made for each other. You people are born for each other. That much lovely couple we are. And some disaster happened, and my lovable husband went to heaven during May, and the pain which I have undergone, no words to express. And for past 3 months, I never and ever went outside my house. Even when I got this thing, today's speech, no, I said, okay, let me try like that. I prepared very much for 1 hour, but okay, it's no problem. Why I am telling you this is, see, when you have a hard time, when you have a hard time, don't think that it's going to be end for anything. Obstacles always strengthen you. This 3 months of hard process made me to realize that, see, this obstacle is to come up in life. Okay, but if I would have been in job, I might be have to be very big question mark how I'm going to see the financial things. But thank God, 8 years of practice, I have a good team that they have taken care of everything, and so that is the reason I don't have any financial constraint. Why I share this is, always be grateful for all the obstacles in your life, because they will definitely strengthen you, and it will make you to continue as you are. Always believe in yourself, and be very strong enough, because the very key factor for a successful practice is assemble strong and stable practice. This is what required. What are all your strength, you just assemble it, and you just make a stable practice. It is indeed with a simple faith and in the power of God, I have charted my career so far, and I will go ahead. Hope that, because 7 o'clock the program is ending time, so I did my best. Always save nature, because many life will be saved in future. Thank you so much.
Thank you very much, Pichi ma'am. I'm sorry for mispronunciation of your name at the first instance. Indeed, your presentation and basically the two key points that you delivered, that art of leadership is to say no and believe in yourself. These are really going to be helpful to us to know. I hope I was audible. I just realized that the mic was dispositioned. But thank you very much, ma'am, for your deliberation. And I didn't know that you have been through a very critical and emotional patch recently. So all the more pass to you. On behalf of Women Empowerment Committee of ICI, I'm glad to express my vote of thanks here. A special thanks to you for accepting this invitation in this special situation, more so, and your advices to have a very segregated, sorted and focused way of practice, at the same time not to lose your patience and faith. Thank you, fellow members who are here with us and made this seminar more meaningful. I'd be failing if in my duty if I do not thank our backend supporting team for offering their support to have this immaculate seminar. I once again thank all of you. Have a great day ahead, and I request the technical committee to wind up this event. Thanks a lot, ma'am.
Thank you.
Yeah.
Thank you. I can leave the meeting, right?
Yes, ma'am.
Yeah. Thank you. Thank you. I appreciate it so much, but timing is very important.
If you